I'm speaking today with James Reeder, who is the Head of Retail Strategy and Decision Support at Absa Bank in South Africa, one of the prominent retail banks in South Africa and, of course, partially owned by Barclays. Thank you, James, for speaking to us today. I wanted to just maybe get a sense from you of the competitive space in South Africa, where the bank's positioned and where's Absa very strong, and also want to get a little bit of sense of the demographics and what kind of a market you reach out to.
Yes, Peter, we may only be 4 major retail banks, but fierce competition, lots of margin pressure on us, a lot of non-traditional entrants in our value chain, particularly retailers and telecommunications companies, also some very niche players in the payment space, but we basically dominated by 4 major retail bank players in the market.
And where does Absa sit in that sense?
I think all the major banks target all market segments, which is quite a large bottom of the pyramid customer base. Obviously, South Africa's got a very high Gini coefficient, which talks about the disparity in income between the lower end and the top end market. All the banks are universal banks that play across the value chain and across market segments. I think the fierce competition obviously is always in the what they call the messy middle market. That's where your profitability tends to be the best. So the messy middle is really fierce, the competition in terms of that. But Absa has made a real commitment to the lower end of the market. We've got a dedicated unit with its own chief executive looking at what we call entry level and inclusive banking market, which really looks at how do we extract value and offer great banking solutions for the under and underbanked.
What are some of your strategies for I guess reaching out to that segment, and also keeping your risk profile quite low?
Yes.
Clearly you have to have a sustainable
100%.
strategy there.
I think it's all about a differentiated customer service, understanding the needs of that segment, and really trying to satisfy that. I think key enablers is obviously our mobile technology, mobile banking, with the leaders in the industry in that as reaching out to our customer base. Obviously, we're trying to look at something different in terms of footprint. We need to balance customer value and need with cost to serve. So we're looking at slightly different and lighter branch configuration options for the lower end of the market. Also going in there with more simplified product sets, which trying to stick to no more than sort of 4 core offerings to that market, trying to simplify it for everyone to understand. Obviously also looking to partner with retailers in terms of a retailer payment solution to also bring down the cost to serve and just get access. Convenience and access are 2 critical components to serving this market profitably. Obviously we're also the biggest social grant dispersers in the country through cash and biometrics and other tools of the trade to make sure that those people that are really very dependent on social grants get their money every month. So it's another key offering to that segment.
Partnership's been a very strong theme in retail banking in recent years. You sort of mentioned some of your partnerships. How do you approach that model?
I think partnerships are very important, obviously, and core to our business. I think it's just very important to make sure there's a mutual beneficial relationship going, some synergies in terms of intent. So I think I think the owners and our partners to come and show value back to the business is very big. I think your normal contractor engagement or external consulting engagement, I think we're looking forward to change some of the rules of the game there, to really say how are you really going to enable our business, not just come into our business and tell us what we already know. I think the reciprocated value we've got to give back is then we have a very clear strategy to make sure that people can understand what our strategic intent is, and we've been working very hard over the last 18 months, 24 months in terms of really clarifying our strategic intent from a retail bank perspective, and to ensure that when we engage with partners we make it easier for us to unlock those synergies.
I guess the telcos are the obvious partners for banks, really, to sort of reach out to the client base and also to keep money moving. It links into the mobile phone banking. What are some of the other types of partnerships that you're looking at outside of telcos?
I think we mentioned retailers. Also got a very extensive footprint. Also in some of those areas where we don't have extensive footprint. And I'm talking about smaller retailers here. We sometimes refer to them as spaza shops, which are really sort of informal merchants. They can play a very important role in terms of deposit taking, but also then servicing the payments and disbursement needs of our customers. customer base. I think that's a unique model where we're trying to help them increase feet through the door, and also try and enable them with some banking technology to make just a better and safer payments landscapes. I think those are new players. Obviously, also there's a lot of niche banks coming into the market. Always try to help them through sponsorship agreements. So we're fairly pro competition in terms of that. And they also address very specific needs for certain customers. And I think other key partners are just obviously always look to partner with government in terms of enabling them. I think banks really play a core fabric of society. We've got a big responsibility to make sure we help the multiplier effects from economic growth, and government's a key client, but also partner for us to make sure we leverage banking for economic sustainability and growth.
Regarding the mobile phone banking, every country has its own sort of version of it. I guess in South Africa or in ABSA itself, what is the flavor of the mobile phone banking, and what do you sort of?
Yes.
How do you make that profitable for yourself?
I think mobile banking, just to take a step back, has been really a long-term journey for ABSA. It's, depending who you ask, between an 8 and 11-year journey. We've made a real multi-channel commitment, especially being driven from the digital banking environment. So our internet banking platform, our mobile banking platform, and our mobile services banking platforms all run on the same platform with the same service-oriented architecture. So it's very important for us to give a consistent customer experience on all of those electronic channels. They've got the same look and feel, very much leverage of the same sort of functionality, which makes them fairly interoperable. I think that's a very, very important strategy for us. I think also we really try to have people trust the mobile device. And I think our Notify Me proposition, where we let people know when there's activity on their account level, was the first step to really make sure that people start trusting the device and don't see it as something separate than the bank account, but rather a channel or vehicle to the actual holding account at the bank. So I think those messaging systems did a lot for us to get credibility and get trust in terms of trusting the mobile device.
As a last point, I guess customer analytics is something that ABSA is very keen on developing further.
Yes.
How have you taken that?
I think we call our customer analytics a center of excellence. It's a word that I sometimes think gets misused, but it's something we definitely in the customer analytics domain take very, very seriously. We're very focused on turning data into information and information through to insights. Core to that, obviously, apart from the specialized skills, is our segmentation approach. We've taken a very strategic stance to move away responsibly from a very biased income-based segmentation to more value-based segmentation, which includes a behavioral component and a needs component from a customer perspective. We believe that clustering customers on that value perspective gives us much more accurate views on the customer and makes our tactical and strategic responses much more targeted. Basically, from a strategic perspective, you'll take the value segmentation approach into customer value propositions, who will then be very strategically positioned at certain customer segments. On a tactical basis, we've got micro segments. The strategic ones would have been macro segments. The micro segments, we are more tactical of nature, which clusters customers by behavior and needs, will then look at having more tactical solutions addressed at making those customers more profitable for the bank, but also make banking more affordable to those customers. Some of them may be using the branch too excessively, and then it's really targeted campaigns to make sure that we create win-win relationships with our customers. So we see analytics really as a key driver for our business model, and I think it helps you with the three foundation principles of our strategy, being one, to balance volume with value, the second one, to create a differentiated customer experience, and the third key principle is to balance customer need and value with cost to serve.
Okay, great. Thanks so much, James, for taking us through that.
Thanks for your time.
Good luck with your project.
Thank you.